Procter Gamble, the world's largest maker of household products. They make everything from Comet to CoverGirl Cosmetics, oil of Olay. Well, that company reported second quarter earnings today that beat estimates at 80 cents a share. But for reaction, we're going to turn to one of the most accurate analysts on Procter Gamble, on P&G. He's Bill Chappell, an analyst over at Suntrust Robinson Humphrey. It's interesting to see because consumer staples were supposed to be the safe haven play, but it looks like there are still cutbacks when it comes to spending on detergents, spending on staples, spending on skincare products. What's happening, Bill?
Well, I think for P&G, it is seen as the consumer staple, but if you think about it, everything they do is premium priced. And so they're almost a discretionary in the U.S. as you're seeing some trade down to lower value products. Plus in emerging markets where they've seen most of their growth, some products like detergent, toothpaste, other things really are actually discretionary and aren't necessarily a staple. So they're seeing a slowdown there as well.
And that accounts for that 18% fall in profits? Is because of the price point you think is maybe misplaced?
That accounts for, in large part, the 5% drop in volume. The 18% of profits also has to do with currency still working against them, as well as commodities. They haven't seen the full benefit of commodities working for them quite yet. But we expect that to start to turn as we move over the next 2 or 3 quarters.
Well, supposedly they're going to be accelerating new product introductions. I'm looking at my notes here from your pre-interview. What's the thought there and how you counter those Forex fluctuations that are going to make it more expensive for them to do business, and then the inability to really raise prices because consumers, at least from the trends we're seeing play out, don't seem to want to spend for that higher price point?
Sure. I mean, if you look at P&G today, and especially the stock, the quarter was ugly, but I think that's the point is that's all behind them. And as they move forward, first with currency, it gets a lot better once we get past September. I mean, currency rates are moving in the right direction, and they'll lap the biggest change in kind of September through November as we move forward. Commodities come down, advertising costs come down. That gives them more firepower to go out and promote their products, launch these new products, and get consumers to kind of recognize the value entrenched in what they do. It's not necessarily regaining all this share, but it's just stopping the consumers from continuing to trade down. And by giving $2, $3 coupons for products you only buy once every 2 or 3 months, that can make a big difference.
Right, but I mean, does this mean like increasing product selection at a lower price point? I mean, how do you raise prices in this environment to make up for profits? Or are you saying they're simply going to sit tight until sort of the dollar's more in their favor in terms of how it's trading?
Yeah, I think it's much more sit tight. I mean, they're looking in select areas to try to have some more value-type products. If you think Bounty, where they've launched Bounty Basics, a kind of a cheaper or a more basic version of what they do, that's what they're looking to selectively do in other categories. But they realize that they're a high-end player. I mean, Tide is $10 versus the private label's $2. You're going to have consumers trade down in a recession. They're just trying to hold the line the best they can. So as things start to stabilize, they can start to re-accelerate growth.
When you take a look at outside the U.S. at the global consumer, what's the appetite for their products in a huge market like in India, in China? What level of penetration do they have there, and what's the potential on the international growth side?
It's still very, very small. I mean, even compared to some other multinationals, P&G is not fully penetrated in China, India, even to Latin America as some of their large cap peers. So there's a ways to go, but it's, one of the things they talk about on R&D, you and I would think about a new razor or a new diaper. They're working on trying to get the cost of a diaper in China down to 20 cents, which is the cost of an egg, so that they can actually really accelerate growth. I mean, that's kind of a different R&D than we would think of.
Well, very quickly, how different was new CEO Robert McDonald versus Alan Lafley when it came to these earnings conference calls?
I mean, I think they were both on the call this time, and I think McDonald will be much more precise. I think he will actually give kind of a new view on the company, being the COO for the past 3-4 years, that I think will be seen as refreshing to investors on a go-forward basis.
Okay, and you're maintaining your current position on Procter & Gamble? Any change?
Absolutely. We absolutely continue to buy, and I think the risk-reward is very compelling, especially on today's sell-off.
Okay, and you own it?
I do not.
All right. Thank you so much. Bill Chappell of Suntrust Robinson Humphrey on Procter & Gamble.